Welcome to Active Trader Setups Trading and Training Series, Chart and Indicator Setups, Ichimoku Cloud Anticipated Trading Patterns. We're going to look at some clouds and map out some high probability trading patterns to watch for on the candlesticks as they set up on the Ichimoku Cloud. This video is brought to you by Active Trader Setups Trading Package, a day trader setups company. Be sure to subscribe to our channel while you're here. It's YouTube at daytradersetups.com. This is part of our trading and training series, Chart and Indicator Setups. Let's look at a cloud. This is a sample cloud right off of a chart. It was a stock chart that had dollar figures rather than an ES, but it's just a cloud formation in the shape that we're looking at. You can see what you're going to find on your cloud information. This is what I call the current cloud. This is the right side cloud, and as it progresses up, this is your right side cloud area. It goes on up even further. Can't see it all. Actually, this right here would be in yellow out here, telling you the value of this line at the time, which is the cloud area. What you're looking for is these flat spots, and most Ichimoku Cloud scanners can only go in, if they can scan at all, and give you this information right over here, the right side cloud area. This is all custom coded. It's synced in with our algorithms as well as set to our settings, and it's locked in, can't be changed. But as well as we can scan the right side cloud level, we can scan when that would be this level at that time. If you came back and visited it, it's the prior right side area, and we can also scan back behind us. So what you look for is the patterns that are anticipated by the chart pattern that's starting to try to develop on the cloud. Now this is the baseline. The baseline, the blue line, and the yellow line are what three of the four parts that make up the cloud. The other part is another moving average. It's a much smaller increment pattern that I don't even plot it. But I plot this because it can become a support area on a stock that's really running up. You'll get those pullbacks on the uptrend, and a lot of times they will hold this level, and you can see that in this particular, this is the shape right now, right here. This is the blue line out to the right. This is where the white line is, the baseline out to the right, and this is where the cloud is, a yellow part out to the right. Now all of this is rising. You'll see these flat spots that come in. The baseline flattened out for a bit and it turned up. The yellow line at that time was still rising, and you can see you had a pullback on the blue. That's that right there, and it turned up. So as you're looking at your candle patterns coming up and you're seeing this blue line here, if you pull back to it, those can be support at that time, because what you're supporting is the cloud that's currently to your right. So many times, if you've had a pattern come in over on this side and it's going up, and you get some gyration, some consolidation, it can come back and bounce here and then head up again and then continue to break out. What can also happen is it can pull up through here, consolidate around here, can even pull back to here, and even all the way down to here, and then come back up. I like to go back and catch these yellow lines, especially if it's a flat spot. This is not really a big long flat spot yet, like over here. but you can get the breakout here. It'll continue up. Many times you'll get up to here. This will be a problem. It'll pull back, touch this, and you'll be absolutely amazed how many times they will be within 1 or 2 cents of this line, 3 or 4 cents on a stock chart, or maybe even to the tick or 1 tick on an ES. You can get a wick bar down below that, and that's just like pinning a trend line or pinning a old high or old low from the top. You go down and test it, and you bounce off of it, and then you get your reversal bar and you get your continuation back up. Now the baseline I was mentioning to you, it's shown right in your data box. Gives you the baseline value, the A value, and the B line. The B line is the right side line. On other data boxes, you'll have an additional B line. It is showing you the level back here. You can see here in the data box the 2 span B yellow lines posted. One is the right side cloud, and the additional one is looking back and plotting the prior level. Of the actual cloud itself is what that's showing you. So the yellow dotted line is the right side line. If you got 2 plots, then it's plotting this line for you. Now, anytime you're looking at a chart and you're pulling into a line and you want to know what the value is of this, and this yellow line is way up here, maybe you're pulling down here, you can just simply take your mouse and mouse over this line, and it'll display that B line. This value right here is what this is plotting. So when you've got a stock that's selling down, you still got a big cloud, and you're looking for it to bounce maybe, or it's broken down below it and you're coming back and you want to know what that value is, you simply find that out by holding your mouse over the yellow dotted line back to your left, which represents this area right here, and you'll know that value to the penny. So some other anticipated patterns. If you've ran up in this area and you get right in here, many times this can start to draw back down. You can get a little flag pattern and then break out. We actually have a scanner for that. It scans for price action inside the cloud with a pullback and then a re-break. We call that the bull flag. And it scans vice versa of that as well. Now, this flag pattern can continue back all the way down here before it breaks out, turns, and comes back up and breaks out. When it turns back up, if all of this took place in the cloud, it'll go ahead and give you that alert early right here. It's not telling you it broke the cloud. It's telling you it had a bull flag inside the cloud, and now it's turning back up. Next, we want to look this same pattern. Comes up this way, nice run, and we start this going back down, and I've sat and watched waiting on my turn, actually looking at a stock, because I know if I turn and I break out, it's going to be huge. And you've got the cloud looking like this over here, just like you do your blue line here. It's telling you well, you got the breakout right there. But right in this area, if this cloud kept this shape over here, and this is coming up, I've seen one not break up and just continue on down, and there's no trade. Eventually this will twist back over, and the yellow will be on top and the blue will be on the bottom. So just because it's pulling back, don't say I'm going long, because you don't know how deep it's going. And the bigger the cloud you have, and this is huge here, the more hard it is to get beyond it. Now, this pattern, when we go up here and we do this pullback and we break out, this can be a really big run. It could also just go here and stop. It may go up to another flat spot back to your left on the cloud and stop. And remember, these items wouldn't be here yet. Where the cloud is right now is this upward trend right in here is equal to where I have this line drawn. So you can get this run up and then you can get the pullback. This is my very favorite setup. I've had the twist, which occurred way back here. That's the twist that equaled that part right there. And now I've pulled back and I bounce off this line. That's a huge high probability trade. And you know, you got a defined stop right in that area, in that zone there, whatever that low may have been right there. You can take that early. We'll explain how to do that in other videos based on the candle alerts we got. We alert it early and we alert it at the close of our doji bar and the next big green bar opens up. We alert it here, and we also alert it on what we call a ST alert, which is a small tick candle that it's gone down and it's penetrated it and now it's coming back above it. A lot of times you'll get those little candles do little flag patterns down there all internally while this big doji's forming, and you got these high and low here. During all this price action, this is when you'll have your smaller tick chart consolidating here. It'll try to break, it'll come down, break up, come back down and touch it. And that's a great opportunity on the second retest. Nothing better than having a defined old high that you've broke through, say, and you pull back and you test it. You do a couple of 2-minute candles, you hit it again, and then you blast off. It's one of the finest setups out there. Our scanners can scan for all of these conditions. We can scan the twist, which is this right here, letting you know that this is occurring over here. We can scan for the pullback into here. We can scan for the run up in here and reject. We can scan for the run back down to here and bounce. And you can choose the scanners you want to run. You don't want to run every scanner we have. You want to run the high probability scans, and it depends on if you're swing trading or day trading. If you're swing trading, you'll be looking at charts that have a lot of day breaks, lines on them, and it takes multiple days for this actions to take place. If you're day trading, you won't even have any day break lines on the charts. We switched over to a little different pattern here. Again, we've got the twist that occurred and we'd had a big downtrend, and this is where you start to get these breakups. If you get a stock breaking up in an area like this, the thinner the cloud, the easier it is to push through. There's less resistance here. This cloud at this time was in the position right here. So if we're right here coming up, this is where the blue line is at that point in time. This is where the yellow line is over here. So right here, if we're running into the cloud in this area, this is where we're at down here, and you're not going to get a reversal till this blue line gets above the white line for sure. It's not even near up here. Now you get this big run up right here and you get the twist over here. Now I could go on and tell you what happened right here. You got a big run. It got a big break. This continued up, and that caused this to continue to rise, and then you got the breakout and you got the baseline rising too. You can see what a huge baseline just kept going. So this stock actually kept going. It may have zigzagged a little and then ran some more, but it kept going. But let's assume that all this didn't take place, and I want to look at the price action you could have gotten right in here. Now I can tell just by the baseline that that's what happened, but let's look at the scenarios on a cloud setup that's right, let's say right here, developed, and we're coming up and we're breaking out. We go through the cloud, again, this can be your issue right here. Can be your first issue of where that resistance was. That's a flat bottom of a cloud back to the left there. And you can run on up. We actually got some clouds. You'll see some that's there on the longer term. We have a pink line drawn, and the pink line represents this cloud back behind you. We don't put it on every chart just to not have as many lines, fewer lines on there as possible. Keep the clutter down as much as possible. The probable pattern here, if you're not already in it long, and if you are in it long, we use our Power Mobo bands to take a look at what may be going on, and you want to try to stay in that trade if that's going on. We'll explain that on a different video. But you can get this pattern back down, hold this line, and then head back up. It may have run further up and then came back down and went this. I love to come back to a nice, especially if I got a cloud that's way out here, big, long, and flat, and this is a longer flat line. Now this right here, again, remember this is thin, so this could actually start. This could just, especially if it's a really volatile stock, or the futures that are having a huge range day, they may just slice through this. If you were on a NQ chart, and on a small chart that you shouldn't be on the NQ, you could see that kind of action just rip right through the cloud. It would come back up, hit the bottom, rip down again, and so forth. You want to get on a big enough chart that can accommodate the volatility you may be having. If you're having a hugely volatile day, go to a bigger chart, and then you'll find an even bigger move coming off that bigger chart. If this was a big chart and you came down and did this same pattern we just shown here, and once you break down, let's say you're watching this for the breakup. I set my trailing auto bar, semi-auto bar. I set the bar trader to take this trade, and it doesn't reverse. So I'm coming down, and I've got it set to take the trade. I don't want to take it down here. If I don't get the reversal here, then I don't want to take the trade down here. I want to wait. Once I get down here, I've gone into a short pattern. This wouldn't continue up here, but I've gone into possibly setting up a twist, and I want to wait on the reversal to come up and hit this line, and I want to take the short off of that line. If you take this bounce for no apparent reason, you don't have an inflection point, you don't have an old low, you don't have yesterday's low, today's low, you don't have a reason for this reversal, I would rather take this trade back down than I had take this trade up. Even if this trade up can be $1 back to here, because it may not be $1, it may do this, here, and straight back down. So I don't want to get involved for what I'm not sure of how because many times, you'll see candles do this. You'll get one up candle and straight back down. And that's, of course, bearish. That's a bear flag. And that's why I don't want to take this initial little bounce here, because I don't know it's going to that line. But I know if I get it all the way to that line, I'm real excited about that setup. So now look, here we ran up. We've done little patterns like this. And our twist is not occurring to way over here now, which represents our twist not occurring to right in here. This is where the blue is crossing the yellow and causes this. So we're not there yet. This is just not it. This is still rising as we're coming up here. So we haven't got a flat spot yet. You don't want to take this bounce. Now, some of the run-ups, as they make the little flat spots in the yellow lines and the cloud's still rising and the blue part's not falling, it's still a big blue open cloud out here. As you pull back, you will bounce off the white line and the yellow line, and that's holding your trend. If you're swing trading especially, and you've got a cloud that's yellow line, yellow line, yellow line, you'll watch the charts and you'll see in the history they're pulling back, holding those yellow lines and continuing up as you get these little flat spots. But in this case here, by the time we get this pullback, the blue is fading. Over here, this is what our cloud looks like. So you're anticipating that, hey, this is probably going to twist. Also, if you're using our trend shift pivot line, which is our red and green line, you see it on some of our charts, you'll have that red line coming up and it'll be starting to curl here. And you'll learn about that on another chart as well. But you can watch our projection charting videos about that. This will break down, go back and visit this line and reject. It's a pattern we teach called projection charting, and it uses our trend shift pivot line. Now, you get this pullback into this cloud here. Now we're below this area out here. We've had our twist occur, so the twist is here. Our yellow line is, at this point, still doing this little rise right here. And you get this consolidation in here. You could get a run back up to here even. Or you can get this little consolidation and break down. This is huge when this breaks down right here. This is your bear flag scanner. It finds the flag pattern taking place in the cloud, all in this area, and then it breaks down below it. It can just rip. If it rips, where's it going? Probably right here. It's probably going into this old flat spot. If it could go that far, it may run down and turn around and bounce again, and wherever this yellow dotted line is progressed down to and came back across that, that's going to be your resistance again. Now, if you're trading this chart and it comes down this way, and continues all the way down this deep, you can expect some kind of gyration here, or it could turn and come all the way back up and run right into this cloud. This is a huge setup here to play for the reversal, and it'll probably be a deeper run down at that time. Now, if you're further up in the chart, hold on, I lost something here. If you're further up in the chart and this area, and you've come down and still broke through, you can anticipate a reversal. Don't chase this down here. If you had a perfect setup on our Mobo bands and you were gaining the momentum here, that might be something to try to go ahead and get in up here and ride it as far as it goes, because it can just continue. But if you're not already in it up here and you don't have that kind of pattern, and we discussed that indicator in another video, if you're coming down this way and you break down, wait on the bounce. It's a super high probability that you're going to get a reversal. Now, if it's early in the morning, that's the time that you may not get that reversal. But if it's in the middle of the day, it's 10 o'clock, 10:30 or later, and you get this breakdown, it's just unbelievable how many times you'll get this reversal. And this is your trade right here. First of all, on this chart, there's been a big run up. That's why this is so thick right here, this area. So if you're pulling, this is one of those instances you're in a big uptrend, you'll pull back and catch this white line, and it'll high probability bounce there. And if you're in a swing trade, that's what you want to see. The thickness of this cloud is a lot of resistance here. That's another thing I don't know if I've mentioned in these previous cloud illustrations as well. If you're coming down into through one of these areas like this and you got a pretty thick cloud that you're trying to come through, more like this, this kind of thickness, it's hard to get through it, so it's a higher probability that it is going to bounce. And then when you're clearing the clouds, it's when you get that big fall off. Now you've got a thin cloud, and this is the kind of setup that I like to see our trend shift pivot zone line coming up and see how it's setting up when we're coming down into this area. That's the green rise. It turns to red as it turns over. And if I'm coming down below that and it's still green, I'm looking for it to retrace back to it on the projection charting videos. Again, that teaches about that. And then you get this breakdown that takes you down through the cloud. So when you're breaking these clouds, when there's nothing left in the way, and when you're reversing back to visit these lines that are long and flat, that's huge support. It's like later on this cloud, if you get out above it and you come back and it's twisted already over here and you come back into this area, this is just a huge high probability bounce area. The longer the flat spot, the bigger the support probably is. Now this particular cloud is probably a stock that gapped down huge and had a big sell-off and had candles way down here, and then they probably tried to give a bounce, flagged a little bit, and then headed back up. I like the secondary bounce off these way oversold stocks way more than I like the first. Sometimes you can get the first, and if it happens to be on a strong support line, it can actually do the whole run back up all the way. You got to look to see if you bounced off a support line that has nothing to do with the cloud. That could be the reason that you got a lot of strong buying come in. I like to look at our lower force indicator reverse and see how strong that was on that initial turn back over. But most of the time, you're going to get a second chance. Now, if I get this pattern and then I get this right here and breaks back up, I'm pretty interested in this if I'm watching this stock, especially if I had a level here that was a reason it was bouncing, whether it be an old inflection line on a stock chart or an old low or something of that nature. Now, if it gives a secondary pullback and it goes on through this level, this can continue down a long way. But when it reverses again, I'm interested again, but I really want to see what happens here. So you get back up here on a super oversold stock. This is what you want to see happen. You want to get this opportunity. Is this thing just ripping up through here, and this is representing, $1.50 here, and you want to get this little zigzag pattern back into your level, and then that's a huge setup there for a big move, and that's really likely what happened on this chart. Now, once you get up here and you start zigzagging back down, when you break this level, you may go back and test this. You don't have to test this and this. You can test this. It's still big and thick over here. Is your level of it right there on the side of the chart. You can reject this and head back down. Those are a lot of high probability patterns. Look on the YouTube channel as well. We'll follow this up on stocks and futures with applying the anticipated patterns using actual stock charts and going through some history and looking at the candle patterns representing a lot of the things we're teaching here today. Thanks for watching our video. Subscribe to our channel while you're here, and come over to activetradersetups.com to find out more about our trading and charting package.